Hey everybody, welcome to the Volatility Report. This is Andrew Giovinazzi, Chief Operating Officer of OpsPit.com. Just realizing that I did not finish posting my blog last night because I guess I are a ding-dong. Anyway, what do we got? We have will the low realized volatility stay with us forever? We posted this a couple of days ago. And you know what? Maybe it might. Again, the European stocks are down a buck. We can't really, I think, what do we trade? SPY traded 1940. I looked maybe to unload a put or two for our strategy letter. Just couldn't quite get enough of a move. We're getting a little bit of an uptick here. I feel like this is kind of the first salvo. Not quite so sure how long this is going to play out. Are we going to see the spike of last Friday to 15? I don't know. Okay. Right now, though, mostly this is all the Russians invading and, everybody in general feeling kind of unhappy about that. So we looked at some low vol earlier in the week, and again, we're getting a little bump here, but where is that volatility showing up? Okay, let's go. There's Burger King recovering. SPY. I might be able to find that little spread I had yesterday. Let's get this thing going. Pro, and let's take a look now at the term structure, and it's not going to surprise me too much how this is acting. Okay, where's the vol going up? Right? You're getting a decent pop in volatility out here about a month out or so. Right around this bulge here. Short term, we're getting a little bit of a pop. Maybe putting part of the decay back in the options. But as far as stocks go, we are not really seeing much of anything. Okay, IV30, as you can see, up in most stocks. But I had a marker in for about 1925 where I thought I could start maybe adjusting some of our SPY straddle here, and we're not even going to see that. I didn't even get one put sale off. And the market is already marching right back. So again, for a delta, we might have to take what we can get and sell a put at this level, but not very much fun as far as where we go. So I think right now, kind of sit here and wait to see how this all plays out, mostly because whatever this drop is geopolitical. All the GDP news, economic news is pretty good. Nobody just really knows what's going on with the Russians. I'll tell you what it is affecting, though, is it is continuing to push bonds higher and yields lower. Okay, so this is clearly a little bit of a freak out on the point of flight to quality. And it's not stopping with, I believe we have reached a new high for the year for bonds. So even with the economy continuing to improve, quote unquote, right, getting better, money is still pouring into treasuries and it has not stopped. Again, the Russian thing may be just another reason, but it's certainly not scaring stocks with the VIX up, 65 cents. That's nothing. So I think what we have is a wait and see. Would it surprise me if the market was up on the day? No, it wouldn't, right? Mostly because it's not reacting near as bad as, it is not acting near as bad as the European markets, which are down around 1%. We're only getting a slight bump here right now. So what we've got is probably a day that's going to be a little soft, and if the news gets marketably worse, we could see lower numbers. Right? We're getting a little rally in gold. We're getting a pretty big rally in bonds, and just not a good reason to buy stocks. Stocks that two people do like, though, they like Twitter, continuing to rise on that, what is the, I guess, Snapchat or whatever that instant messaging service is. It's driving the valuations of Twitter up, it looks like. Right? We're getting a little bit of a pop in the vol futures, again, but not very much. Right? You've got September future now trading what I would call probably at a fair level, given what's going on. But I don't expect the futures to rise a lot even as VIX starts to go up, because there's been a ton of future premium in the products for at least a week now. And that's been the reason why. You know, you've got this tensions or potential tensions overseas with the Russians and Ukraine, and there just was never a willing seller of futures. People were letting the at-the-money volatility die in the index, but they really weren't selling the futures below 13. Okay, and even today, I mean, you've got to look at it. You've got barely a quarter of a 1% move. So from a realized vol point of view, that's I don't know, that's less than 5 vol. It's nothing. So the market is continuing to not move even though we're at all-time highs. And that is where we are. The problem is, right, it's very easy for the market to move at this level, and volatility still, short-term, is extremely cheap. Right. So real simple, these options to me are kind of, I certainly wouldn't want to sell them at this level. We might roll to buy some. And that's what we've got. But, I mean, you got to be realistic here. It's still pretty cheap implied volatility for the potential that could still happen in Russia, like bad invasion, who knows, right? But we're not seeing near the panic, and the market is staying hugely resilient. Right? I think everybody just saw that as a buying opportunity. And that's where we are. I'll see a lot of you in the chat. And again, unless the news gets worse, it would be very easy for us to rally, as crazy as it sounds. All right, everybody. All right, you guys have a good day, and I will talk to you later. Bye-bye.